Welcome back to Investing Talk Podcast.
Today we're looking at BigBear.ai.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Yeah, let's do it.
Look, the headline news here, it really isn't the Q3 revenue dip.
Which a lot of people are focusing on.
They are, but the real story, the massive strategic move, is the $250 million cash acquisition of Ask Sage.
Okay, let's unpack this because that is a huge number. Why is that deal so important right now?
Well, it's key for, I'd say, two main reasons. First, it instantly bolsters their secure generative AI offering for defense.
Okay.
Ask Sage brings in around, $25 million in annual recurring revenue for 2025?
And that's a significant boost.
It's huge, and it represents a six-fold growth from prior year levels just in that one segment.
Six-fold. Wow.
And it targets a massive, a $20 billion secure AI market.
So that's not just a small purchase, that's a whole growth acceleration engine for 2026 and beyond.
Exactly. But what does it mean practically for their defense clients?
Right, for the end user.
It means better protection of their market share. You see, Ask Sage brings FedRAMP high accreditation.
And for anyone who doesn't live and breathe government contracts, that is basically the golden ticket.
It's
right?
everything. It's the highest level of security clearance for cloud services. It means you can handle classified environments.
So it's an instant credibility boost.
It's more than that. It's a barrier to entry. It lets them immediately integrate with BigBear.ai's existing federal clients.
And how many users are we talking about?
Over 100,000 government users. This creates extremely high switching costs.
Once you're in that ecosystem, it's very, very hard to leave.
Almost impossible.
Okay, but now we have to address the other side of the coin. The immediate financial performance.
Yes, we do. So despite beating analyst expectations, which is, a small positive,
Right.
Q3 2025 revenue was $33.1 million. That's down 20% year over year.
20% is a significant headwind. So how are they navigating that kind of contraction?
Well, they're prioritizing aggressive growth investments. That's really the story here.
Which explains the margins.
It explains everything. It's why we see negative free cash flow and just a very low net margin. It was, negative 274.7%.
Wow. But management seems confident. Their full-year guidance of $125 to $140 million suggests they expect a recovery.
They do, and this is where it gets really interesting, as you said. The balance sheet strength.
The cash.
Exactly. Despite that $250 million cash outlay for Ask Sage, they still reported a record cash balance.
A record balance after spending $250 million.
A record.
Yeah.
$456.6 million in Q3 2025.
That is a massive cushion.
It is. The strong liquidity, plus, they have a backlog of $376 million.
Okay, so that gives them visibility.
A lot of visibility.
Yeah.
And it lets them fund these big growth initiatives without immediate dilution pressure.
So to sum it up, the downside is the current revenue contraction and those eye-watering negative margins.
But the upside is that massive cash cushion and a lot of contracted future revenue. It's a trade-off.
A very deliberate one. So what about the core advantage here? What's keeping competitors, and let's be honest, we're mostly talking about Palantir, from eating their lunch?
Yeah, that raises the really important question of differentiation.
It has to.
BigBear.ai's moat is specialized IP. It's in secure AI orchestration platforms, and specifically their platform called Conductor OS.
So they're not trying to be everything to everyone.
Not at all. They focus on niche, regulated national security sectors. The high switching costs we mentioned, they come from integrating data engineering and security customized for these government clients.
So it's a much more tailored solution.
Very tailored. And they're also expanding globally, right?
They are.
We're seeing expansion with the Abu Dhabi office and partnerships like the border security work with C-Speed.
Which helps offset some of that federal spending slowdown you sometimes see.
Correct. It diversifies their revenue base.
And what's fascinating here is the macro environment. I mean, we're seeing a huge sector rotation into defense AI stocks.
Oh, absolutely. Their peers are up 30% or more recently. That provides a really big tailwind.
So the whole sector is lifting up with them.
The whole sector. Now let's look at the immediate technical picture.
Okay, because the stock has been volatile, to say the least.
It has. It slipped nearly 5% recently, trading near, $5.73. We're seeing a support cluster around $5.50 to $5.66.
So why the recent volatility? What's causing the churn?
That brings us to the single biggest short-term risk.
The shareholder vote.
The shareholder vote. There are significant investor concerns about the proposed doubling of authorized shares to 1 billion.
Which is fueling some pretty serious fears of dilution.
Exactly. And this issue has been just dominating the somewhat bearish immediate market sentiment.
So this vote, which I believe is reconvening on January 22, 2026, is the immediate overhang investors are watching.
Absolutely. It's a huge focus for the market,
It makes sense why.
especially since short interest is notably high. It's at 21.5% of the float.
That is very high, which sets up a potentially explosive situation.
It really does. If the growth catalysts hit like, the Ask Sage integration taking hold, or some rumored government funding like OB3 comes through,
And what happens?
that high short interest sets up the potential for a serious short squeeze,
A pressure cooker, basically.
a total pressure cooker.
Yeah.
And, the analysts seem to be maintaining a kind of modest view amid all this noise,
Yeah, I've seen targets ranging up to around $8
which still suggests significant upside if they can just execute.
if they can get past this vote. So what should you, the listener, be watching for in the next few months? What are the key milestones?
We have two critical near-term events. First, obviously, is that January 22nd shareholder vote on the share authorization.
Clarity on that is priority number one.
Number one. And second is the Q4 2025 earnings report. We expect that late February or early March 2026.
And what do they need to show in that report?
Well, management will need to provide real clarity on the Ask Sage integration. And, crucially, they need to deliver strong 2026 guidance that incorporates that new $25 million ARR boost.
So if we connect this to the bigger picture, the whole thesis relies on BigBear.ai successfully using its cash and its backlog to fully integrate Ask Sage.
Right, and capitalize on that surging demand for secure AI and national security.
It's all about that integration.
The story here is a transition, really. They're managing current revenue softness while using a massive cash war chest to buy a strategic growth engine. The next few months are all about execution and, of course, navigating that shareholder vote.
It's a very high-stakes play in a high-growth sector. We will definitely continue to follow BigBear.ai closely as those catalysts approach. Make sure you don't miss our next analysis.
Subscribe to the podcast to stay up to date on all the latest insights.